Good afternoon, traders and investors. Will back here with another one, coming to with a Tuesday market recap. Hope everybody had a very good day. And in today's markets, guys, well, we had a nice little bounce by the bulls after such a brutal day of destruction yesterday. This is definitely a data-driven market, guys. And on a day like today, where there is no data whatsoever, no new headlines out of Japan, no geopolitical headlines out of the Middle East, and also no economic data out of the US, usually the bulls will have the best chance of recovery. But just goes to show this is a very data-driven market, and the next data point that may just throw some sticks in our momentum wheels is going to be on Thursday when we get some initial jobless claims. And you guys saw how the jobs data went last week on Friday after the non-farms payroll. People are definitely paying a lot more attention to the jobs market right now. So if ever your jobless claims come in higher than expected, meaning potentially more and more people are unemployed, that is definitely going to have a negative impact on the market. But until Thursday, we may just have some clear skies yet. So in today's video, guys, a lot of things to cover once again. Number one, we're going to be going over a few earnings that I have prepared for you guys, doing these in rapid form because we're going to go over 4 of them to be specific. Uber, Celcius Holdings, SuperMicro, and AirBNB, a few of the big ones that we're going to cover today. Of course, there were a lot more, but those are the main ones that we're going to cover because they have the most retail interest. Then, of course, we have a number of earnings left on the week, and my goal is to be covering at least 2 of them per day. Tomorrow, we might look into maybe Shopify, Walt Disney, and Robinhood, to name just a few. So, after we cover those earnings, guys, we are, of course, going to cover our major technical analysis rundown of our major stock market indexes, followed by some big tech names, and lastly, go into my portfolio to see any new trades made over the course of the day. So, guys, a lot to get into. Let's get into it right now. So, SPY up a very nice 0.92%, but as you can see by the candle formation, they were actually up a lot more before giving back a lot of it there in the last 1 hour of trading. The SPY was actually up at one point today over 2%, right? Well, actually just under 2%. If you were to take bottom to top, it was actually over 2. And the QQQs right there, they were up also significantly on the day at one point over 2.5% to the upside, unfortunately retracing a lot of that in the last hour of trading as well. Now up only about 0.96%, guys. But the market structure was quite good today. A very broad market recovery across the board. Take a look at the heat map right here. Really nothing to really scream home about in terms of any red names in the market, but definitely a very balanced and mixed market in terms of your broad market recovery after yesterday's disaster. On the one-day relative, you can see that most of all your indexes, actually all of them, were netly in the green. So nice little recovery, but it still leaves us down on the one-week relative, guys. After the damage that was done last week and on yesterday's session, we still have most of your entire S&P in the red category, only utilities etching out a little bit of a gain. So in today's video, guys, before we get into more technical analysis, let's jump right into some earnings, shall we? We're going to start off with a quite good one, and that is going to be Uber. So Uber coming in with earnings this morning before the bell, and they were down significantly, guys, over the last 3 weeks, down from like 75 all the way down to 55. 27% drop in just 3 short weeks. Lucky for them, though, they reported very, very good earnings, which reiterated their status as pretty much the industry leader in the ride sharing and food delivery business. So in terms of their earnings, what happened, guys? Well, they had a triple beat. Not only did they beat on EPS and revenue, but they actually gave very decent guidance for the remainder of the year. So look at this phenomenal beat on EPS here, guys. Over 50% beat on EPS and a nice little 1.25 beat on the revenue. So let's take a look at some of the data and exactly what happened over the course of the quarter to warrant such a nice price increase, guys. Uber was up almost 11% today. Very nice day for them. So Uber reports better than expected earnings and revenue for the second quarter. Let's have a look at one of the highlights that I figured that would be interesting in the article. Then we're going to dive right into their actual earnings reports. So in May, the company announced a partnership with Instacart that would add a restaurants tab to the grocery delivery app. This is the Instacart app, of course, enabling its users to order from restaurants and have deliveries fulfilled by Uber Eats. So Uber really out extending its reach across different platforms right now. Very nice to see them do that. Also, in July, Chinese electric vehicle maker BYD and Uber announced a partnership to bring around 100,000 EVs to Uber drivers starting in Europe and Latin America. The companies also plan to collaborate on future BYD autonomous capable vehicles to be deployed on the Uber platform. Very interesting partnership for them, guys. And that's going to really go into moving their expansion into a lot of Asian Pacific countries as well, and also Latin America, of course. So very, very interesting to see them expand with the help of BYD and their EVs. So moving on into their earnings report, guys, let's go into it and you will see it is actually very good. Sorry if the highlighting is a bit pale, guys. I don't know why the colors come out really pale on some earnings report, but I'll do my best to read these clearly and concisely. Gross bookings grew 19% year over year. Very, very solid, guys. And they brought in free cash flow of 1.7 billion, an extremely solid quarter in terms of profit margins, that's for sure. Here's what the CEO had to say. Uber's growth engine continues to hum, delivering our 6th consecutive quarter of trip growth above 20% alongside record profitability. This is true. The Uber consumer has never been stronger. More people are using the platform and more frequently than ever before, while drivers and couriers earned a new all-time high, almost $18 billion in the quarter. Very good. Strong top-line trends and operating leverage across the P&L demonstrate the durability of our growth and significant cash flow generation underlying our platform. If you guys don't know what operating leverage is, it's the ability to increase revenue while maintaining costs relatively the same or increasing costs slightly less than revenue expansion. That way, when your revenue is growing, your expenses are not growing as fast and you can widen your profit margins as your company expands. So nice to see them having positive operating leverage. We started share repurchases against our inaugural authorization during the quarter as we continue to drive long-term shareholder return. So putting the shareholder first, nice to see them doing some buybacks. Their net income for the quarter, so the bottom line profit, was $1 billion, and that's a 9.3% net income margin. That is relatively in line with what Uber's been reporting on average over the last 4 or 5 quarters since they've turned into a profitable company. So nice to see them able to hold their margins and even continuously expand them ever so slightly. Share repurchases were $325 million for the quarter. Now, let's move into some of their highlights, guys, and that will be pretty much it for Uber. So take a look here in terms of the progression of their business. Monthly active, it's not exactly paying customers, but it means the same thing. So MAPCs, 14% year-over-year growth. Very nice trend line, guys, over the last fiscal year. Monthly trips as well has seen a nice gain here, on average about 6% year-over-year. Very good. And trips total, very nice as well, 21% boost in trips year-over-year. So company expanding on all the metrics that really count. Gross bookings, very nice. There's your 21%. Revenue as well, very nice expansion, 16% year-over-year. And then you have your adjusted EBITDA, which is basically earnings before interest, taxes, depreciation, and amortization, also known as gross earnings, up a very healthy 71% year-over-year. Very good to see them bring in more and more profits. Now, in terms of their breakdown between their mobility, so their ride-sharing service versus delivery down here, you can see everything is going good across their 2 lines of businesses. Gross bookings in terms of mobility was up 20% year-over-year. Revenue, nice increases as well, and your operating margins as well have been coming up significantly. Then in terms of delivery, guys, that business too is doing very well. 17% gross bookings growth right there. Revenue growth as well of about 9%. That's really higher than their ride sharing, or sorry, it's really higher than what I meant to say is similar services like Lyft, right? So Lyft is a bit under that at about 7-8%. So Uber's still dominating in the delivery revenue growth segment right there. And let's take a look at that's pretty much it, as a matter of fact. So I'm going to go through these quickly, guys. I don't want to spend too much time because I'm trying to make these videos shorter, right? So in terms of their fundamentals, right? So we have record profits, monthly users steadily growing, the buyback started, and record free cash flow for a $1.7 billion quarter. Their balance sheet, guys, is extremely solid. Nothing bad to say about the financial health of Uber right now. They do have about $12 billion worth of debt, but they do have about half of that in cash and cash equivalents, and they do bring in positive free cash flow per year. So I would not say debt is a problem for the company. Also, take in consideration their expansion curve, going to go further and further into positive EPS territory. Very nice EPS expansion through 2027, and very beautiful revenue expansion through 2027 as well. Now, in terms of the valuation right here, guys, is the company cheap or expensive? Where it stands right now at about the $64 mark. So in terms of your 2024 PE at $65, it is about a 65. Now, that might seem high, but keep in mind they are growing EPS at 34% per year, which gives them a PEG ratio at $65 of 1.91. I'll remind you, anything below 1 is very good, very cheap, in other words, share price. Anything below anything between 1 and 2 is okay, but you want to be closer to 1. Anything above 2 starts to get a little bit rich. So Uber, when Uber was dipping down here in the lower 50 range or mid 50 range, it was a lot better, right? You would have pretty much a PEG ratio closer to maybe 1.7-ish, 1.6, and that is very decent. At 1.91, it's still not too bad, but if I had to pick up more shares of this one, which I would be interested in, I would really have to maybe wait for the market. If the market continues to dip, think of the SPY and the QQQ. If we can maybe revisit this technical level of support, 60 and 55, that would be a nice place to add some Uber in my opinion. As of now, really just a monthly consolidation phase above your prior all-time highs. And since the company is just growing very well, I really don't expect this share price to crash through the floor anytime soon. So what I'm saying pretty much is anything between $60 and $50 could be a very, very decent buy over the short, medium, and long term. If ever the markets do sell off a bit more, I will maybe be looking to add a little bit of shares to Uber, as I do have it in a long-term portfolio. It's not a very big position as a whole, but I still do want to have some exposure. So that is pretty much everything for Uber. Hope you guys enjoyed that. Now we're going to move into company number 2, which is going to be Celcius Holdings. Now, Celcius Holdings, guys, has been a story of just a sheer sell-off, right? Since the highs in May, the company is down right now over 60%. Very, very crazy. They were very, very positive year to date. And now, unfortunately, they're really negative year to date, giving back all of their gains, guys. They're now down 25% year to date. So is the sell-off justified? The sell-off started because there was some growth concerns over the brand, because some reports said that Pepsi was holding less and less of their inventory. Obviously, Pepsi is the main distributor for Celcius Holdings because Pepsi has the best shelving space, so Celcius gets the best exposure. Keep in mind, Pepsi also owns 8.5% of this company, so they definitely have skin in the game and they want them to do the best. So the moral of the story for these earnings, guys, is to determine whether or not there is going to be a material impact of the consumer slowdown or whether or not the company is still growing fine. So let's take a look at some of their earnings, guys. They came out before the bell this morning, and they absolutely crushed this current quarter. Nothing bad to say. The problem was a little bit weak guidance. They acknowledged that consumer spending was a little bit lower and taking away from their sales. But that's not this company specifically. You will see that Monster Beverage and even Red Bull have been affected by the exact same thing, this consumer slowdown. So let's take a look at their quarter, guys. 20% beat on EPS, very healthy, and a nice 2.79% beat on revenue. Now let's take a look at some of the numbers for Celcius, or rather what people are saying after this earnings report, right? So Celcius posts strong earnings, but competition is heating up. So energy drink company Celsius easily beat the estimates when it reported earnings on Tuesday, but warned it is seeing slowing growth and plans to offer more promotional deals to regain its momentum. What does this sound like, guys? McDonald's, right? Sounds like McDonald's, sounds like Pepsi, and sounds like Coca-Cola. So not a company-specific problem, more of an industry problem as a whole, right? So let's move on. The company noted growth was strong across all channels. Shipments via Amazon rose 41% from a year ago, while those sold via fitness clubs increased 30%. In convenience stores, the average units sold per store increased 43% thanks to shelf space gains. So you can see the extremely high growth numbers that Celsius still does benefit from. They are the leading energy drink seller on Amazon's platform, which is a very large thing to say, right? Even beating out Monster Beverage and Red Bull. Celsius said it had 11% control of the energy drink market in the last 4 weeks ending July 14th, up from 9.6% a year ago. So they're gaining market share and taking share from rivals such as Red Bull and Monster. Very, very good. Still, management noted market share has fallen by 0.5 percentage point from the previous quarter, leading to worries that its growth might have reached a plateau. In the past 2 quarters, the company said Pepsi, its major distributor, had reduced inventory of its products. Well, here's what the CEO had to say. While we achieved strong space gains, we also began to feel the effects of some macroeconomic factors that are pressuring same-store sales and affecting consumer purchasing habits. There it is, the acknowledgement. The first time in the company's quarterly earnings that they have acknowledged this problem. They did not do it last quarter. So, continuing, the market share loss came after rivals lowered prices to attract more consumers. Celsius plans to do the same in the second half of the year, launching more promotional programs and boosting investments in marketing. What does this mean, guys? Promotions means reductions in net margins. Good thing they have very good net margins. They can afford to reduce their prices. But this one right here, boosting investments in marketing. So what I hear is Number one, they're going to reduce prices because of promotions. That has an effect on margins. What else has an effect on margins? Increasing your costs in marketing. So the margins will get squeezed on both fronts. In other words, our pricing promotional strategy and architecture is really key as we go forward, said by the CEO. So there are the problems by Celcius Holdings. You can see this revenue graph right here. You can see that although the revenue has been exploding, it is kind of plateauing right now as they deal with those macroeconomic factors, but still tremendous growth here, guys, right? Take a look at their gross margin for the quarter. You can see this is first half of 2024 measured against first half of 23. Nice net margin expansion. So they have margin to give back, to spend on marketing and also to spend on promotional deals, right? That is for sure. In terms of net income, this gives them 21.7% net margins for the quarter. Once again, reiterating, they do have the buying power, or they do have the purchasing power to do that, guys, right? They won't get hit too much in the margins. Take a look at Celcius Holdings, their margins over the last 5 quarters, and you'll see they've expanded all the way above 20%. They used to be around 15, 16%, now up to 21, and that was pretty much the same over this quarter. So I wouldn't be too nervous about their margins as a whole. Now, one last thing I do want to point out is that they are expanding the business and continuing to grow market share in international markets. So Celcius began sales in the UK and Ireland in the second quarter of 2024 through the fitness channel and in select gyms. Very good. Sales in Canada continue to exceed the company's initial expectations in Q2 2024, during which they introduced Celcius Sparkling Green Apple Cherry to the Canadian market. I've tried it. It's actually quite good. Sales in Australia, France, and New Zealand are expected to begin in the second half of this year, with broadening reach throughout 2024. So the moral of the story, guys, is the company is expanding both locally and internationally. We saw that they are gaining market share from their rivals. So even though we might be in a consumer slowdown right now in terms of a cyclical period, just know the company is expanding, and 2025 should be a very decent year for them as soon as consumers regain a little bit of that purchasing power. Now, in terms of the company's fundamentals, guys, nothing bad to say about them whatsoever. Take a look at this balance sheet. Their balance sheet is amazing. No debt whatsoever to speak of, tons of cash and decent free cash flow per quarter, decent net margins as we saw as well. And in terms of the growth forecasts here, guys, you can see that EPS is very streamlined growth over the next couple of years, and revenue as well really starting to explode come 2025, 26, and 2027. So looking very good, and all of the analyst targets, guys, are well above the current price, even with today's re-ratings down. The midpoints are in pretty much the high $60s to $70 range, so it could be a nice opportunity, guys, for a buy down here. And as a matter of fact, I am playing this one in the lower $38 range, which I do believe to be truly fair valued, almost undervalued for the company, right? So this one does a very good job. They only have 378 employees. Monster has 5,000 employees. Red Bull has almost 18,000 employees. So good cost management internally by the company right there. The market cap of this company is only $9.4 billion. Their closest competitor, Monster, is at $53 billion, and Red Bull is all the way at $80 to $90 billion. I truly do believe that this market cap can expand, and it really did prior, all the way up to maybe $20, $25 billion, and that would be not too bad for this company. That would pretty much be the peak of their valuation if you consider the next couple of years. So that would really be all the way back up here, right? Now, in terms of their valuation right now, so take a look, guys, 2024 PE is about 40, right? So a little bit high at a first glance, but keep in mind they are growing EPS at 30% per year. That gives them a PEG ratio of 1.33. Very, very decent, guy. Very, very decent PEG ratio for such a good company, which is why I really like playing it in this lower area right here. If we tumble a little bit more here, guys, $37 down to $32 could be a very decent opportunity to bid this company and hold it for some long-term appreciation. The fundamentals do support it, but just keep in mind it is a cyclical company, and this current consumer drawdown or a consumer discretionary drawdown that we're in is the one and only thing holding them back right now. Definitely not a problem with their fundamentals as a whole. So yes, I really do like this one in these lower ranges. Once again, 37 down to 32 could be a great little position starter if you want to hold this one for some long-term gains. The company is still growing fantastically, and I do believe that next year should be a very good year for them. So that's why I'm looking to build a little bit of position here and just ride it out, right? I would much rather buy into this company than somebody like a Starbucks. That is just my humble opinion. So that is pretty much everything for CELH. Now let's move into our third one, and that's going to be another big one, an interesting one, guys. We're going to take a look at AirBNB, and unfortunately, AirBNB did not do too well, and they're doing even worse from the last time I checked it. Now down almost 16% in the after hours. So what exactly happened to the company to be down so much, guys? Well, Unfortunately, the guidance was not good. And I swear, guys, it's been a very long time that we've seen a good quarterly earnings from AirBNB. They pretty much go down every single one of the last 6 quarters, and it's usually always in line with their guidance. I don't know if the management team is just not that experienced in giving guidance, but they usually always come in under their guidance. Not the best thing to do, in my humble opinion, right? Which is why we always get some nasty earning surprises to the downside. So the shares are trading around 110 right now, very steep discount, bringing them all the way back to the pricing that they had last May of 2023, and even prior to that when the markets were getting annihilated back in 2022. So interesting to see, are they a good buy right now at 110? Let's take a look at what happened during the earnings, guys. They had a miss on EPS, right, by about 5.75%. Definitely not going to get it done in this type of market, guys. And they did have a slight beat on revenue by about 0.32%. So let's dive into the gist of the article here. AirBNB shares dropped 14% on earnings miss as company warns of slowing U.S. demand. Now, even some travel companies, guys, are saying that Q3 might be a slightly slower quarter. Exact same thing as Booking.com. Their company said last week in their quarterly earnings, but Q4 and 2025 guidance is fairly good. So maybe just a temporary slowdown here coming up into this current quarter, which runs pretty much July, August, and September, right? So moving on in. Let's take a look. Revenue increased 11% year over year, which was very decent. AirBNB reported a net income of $555 million, down 15% from $650 million. So the net income, guys, I wrote it down. It was down to a tax rate increase, not because they are poorly managing their costs. So that's why they saw a little bit of a dip here in net income, bringing their profitability down. But taxes are a real cost, so we cannot ignore it. Now, the company guided to, here's the reason for the drop. The company guided to third quarter revenue of 3.67 to 3.73 billion. The midpoint is 3.7, of course, but also warned that it expected moderation in year-over-year growth for nights and experiences relative to the current quarter. It also cautioned that it was seeing shorter booking lead times globally and some signs of slowing demand from US guests. AirBNB said users booked 125 million nights and experiences, its highest second quarter number ever. We saw continued growth across all regions compared to Q2 2023, with Asian Pacific and Latin America again leading the way. So let's move on in, guys. Definitely not a good thing when even a company like AirBNB is signaling a little bit of weakness. They might be sandbagging their earnings for next quarter, but definitely not the best as a whole. So here you go, guys. Here's your net income figure. You can see 20% net income margins, very decent with that 11% year-over-year gain on revenue. Free cash flow right here of $1 billion is fairly good. That's an improvement of 16% year-over-year. And their gross booking value as well. So nights booked on the platform, right? 11% to the upside, $21 billion, and nights and experiences are up 9% year over year. Very, very healthy for them. They are expanding in other markets as well. One of their focus that they've been doing for the last year is they are going into under-penetrated markets, and they continue on that focus as well for their international expansion, already being in over 220 countries. So let's move on in a bit further here, guys. I wanted to point out their average daily rates. Average daily rates was $170 per night in Q2, increasing 2% in relation to Q2 of last year. Not enough, however, in my humble opinion, guys. That's not even keeping up with the rate of inflation in the U.S., right? So we'd like them to see a little bit more pricing power from the company being able to raise their average daily rates a little bit more than expected. Maybe they are keeping it relatively low to keep demand strong for the company, but definitely not the best pricing power in my humble opinion, below the rate of inflation. So maybe that's what hurt them a little bit, but maybe the offset and increased demand kind of offset each other, right? Give me a quick second, 2 minutes. 2 seconds rather. Take a look at their expansion, guys. Nothing bad to say here, right? Quarterly revenue expansion, very decent expansion over the past couple of years measuring. So these are all the second quarters. All these graphs will be Q2 of 22, 23, and 24 moving onwards. So nice expansion in quarterly revenue, nice expansion in quarterly net income, 20% over 2022. However, a decrease because of that tax rate increase, right? So moving on in. Quarterly net cash providing by operating activities, basically net on an operating margin metric, right? Those were up, so nice to see them improving margins, even if their demand is slightly slowing. Quarterly free cash flow, there you can see a nice little bump on quarterly free cash flow. And in terms of their share count, they repurchased $749 million of stock in Q2 to help manage the impact of share dilution. You can see their net shares outstanding, even though they do issue some shares to management and employees, of course, they are still at a net share burn rate. So nice to see that they're not diluting shareholders. They're really buying back a lot more than they're actually issuing, right? So in terms of the balance sheet, guys, very, very healthy balance sheet. Nothing bad for there. They still have about, we'll go over that in TradingView. They announced they still have about $6 billion in share repurchases outstanding. Well, actually minus the 750. So about $5.2 billion in shares outstanding. 5.2 billion, guys. They have a market cap right now of about 84 billion. So 5.2 billion divided by your 84, that's about 6% of the outstanding float that they will be able to buy back. And in my humble opinion, they will start doing very decent buybacks down here, guys, in the lower 109, 110 level, which should be a great location for management to really execute some of those buybacks. So in terms of the balance sheet, guys, nothing really bad to say about AirBNB as a whole. They just went down because of guidance alone. In terms of their balance sheet, they have way more cash on hand than they have debt and generate a decent amount of free cash flow per year. Nothing bad to say there. In terms of their growth over the next foreseeable future, guys, you can see that 2024, a little bit of a down year because of that consumer cyclicality. They had said this prior to this quarter as well, so nothing new there. 2025 through 2027, however, we should see some net EPS expansion and then revenue expansion, no blips whatsoever. That continues to march on forward. Just going to be a key focus to see if they can maintain that profitability as their demand slightly slows into this coming quarter. But guidance for Q4, the remainder of the year, and 2025 should be quite good. So moving on in, guys, in terms of valuation, is it a decent buy down here at the 110 level? Well, let's have a look. So they are growing revenue and EPS very healthily, double-digit gains. So their 2024 forward PE at 112, right above where it is right now, is about a 25.2. Not that bad in terms of Airbnb's historical averages. Usually it's been a lot higher than this. And their PEG ratio right now at 112 is about a 1.67, right? So right between that midpoint of between 1 and 2. This is really not that bad for the company. As a matter of fact, it is one of the cheaper valuations that I've ever seen on this company, really since we got crushed back here in 2022. But as of recently, when they have been growing significant revenue and significant user bases from there, it is one of the lower valuations that I've ever seen on the company. So I am a fan of building a position on Airbnb all the way down here, guys. 110 all the way down to $100. Very manageable valuation and decent growth for the company, but it is a consumer cyclical stock, right? So that's why it's been coming down. I don't see any long-term red flags for the company whatsoever, just a little bit of cyclicality. So building a position here and sitting on it for maybe the next 6 to 12 months could be a decent value proposition, as it is in one of their cheaper locations. Can the stock ever drop a little bit lower because of market conditions? Yes, but just understand that at these current levels, it's cheap. So under there would even be a more solid buy. So think of something maybe like a 110 initial entry. And then if ever we revisit the lower 90s or mid 90s, could be a second decent location to add. That would pretty much be around your all-time lows for the stock price right now, right? So that would be a decent location all the way down here to be adding some shares for the long term. Obviously, as of today's earnings, they'll have lost the major timeframes, so it will take a while for them to recover. So more of a long-term position, in my humble opinion. Even maybe for a little bit of a recapture for a swing trade could be interesting, guys, but this one is more of a medium to long-term buy, in my opinion. And that's pretty much everything for Airbnb. So that leaves us with only one, and it's one that gets requested a lot on the channel, guys, and that is going to be SuperMicro Computer, SMCI. So SMCI was not having the best time, of course, over the last couple of weeks because of the more recent semiconductor sell-off. They sold off from 961 all the way to yesterday's low, 44% in only 2.5 short weeks. Very hefty sell-off, of course, right? And today's earnings did not help that, guys. They were down 11%, down almost all the way down to about 13%. And just before I forget, I'll show you at the end of the video, but I did buy some shares. I picked pretty much the lows of the after-hour session. I got filled at about $530.12. Very low. I only bought 2 shares, though, because I listened to the earnings call and went through their earnings, and they really were not that bad. I think Wall Street is kind of misinterpreting the data a little bit from the management team. But let's have a look here, guys, right? So EPS, definitely, this did not help, right? So they did have a double miss, but I'll explain the reasons for the miss, and you guys will see it's actually not that bad. So miss on EPS here by about 23% and a miss on revenue here by about 0.16%. This miss on EPS, guys, they did forecast. This is because they spent a lot of money kind of ramping capacity for their liquid cooling solutions as opposed to their air-cooled solutions. So they're kind of phasing out their air-cooled server racks and favoring the liquid cooled racks, which companies like NVIDIA are preferring more and more as they come out with more advanced products like NVIDIA's Blackwell GPUs, right? So they did guide for this prior, but I don't think their guidance was adequate enough. They should have guided a little bit lower. I don't think that they knew that they were going to get hit that much by the demand for liquid cooling and the cost associated with making that product mix shift, right? So let's get into some of these numbers here, shall we? So SuperMicro announces 10-for-1 stock split. That I did not tell you. That is definitely the highlight of the day, that 10-for-1 stock split. That's pretty much the end of the bullishness, however. But actually, no. Not the end of the bullishness. The guidance for the remainder of the rest of the year is very good, guys. They increased guidance and they said that AI demand, because of the AI demand for their products was through the absolute roof. So this quarter, the numbers that they reported this quarter is more likely the reason for the share price decline. The guidance for the rest of the year and 2025 is very, very good. And that is good for the rest of the semiconductor industry as a whole because it shows that the growth and the demand is still there. TSM told us this, ASML told us this, AMD told us this, and now SuperMicro is telling us this as well. So SuperMicro said it expects first quarter revenues first quarter. I mean, it's next quarter, but they obviously run a different fiscal taxation year, right? So let's just say it's next quarter. So SuperMicro expects next quarter revenues between 6 and 7 billion, beating Wall Street's estimate of 5.5. That's a heck of a beat here, guys, right? 15% beat almost. It expects EPS of 5.59 to 8.27, 7.50 at a midpoint compared to the consensus estimates of 7.58. So missing a bit on EPS, which is a metric of profitability because of those costs associated with that liquid cooling that we're about to get into right now. So let's break down exactly what they're trying to do. So here's their quarterly results, right? So their strategy, right? We obviously now have the full, we just went over their next quarter guidance that we just, in terms of revenue. Now their whole fiscal year revenue guidance, guys, 26 to 30 billion. Look at these growth numbers, absolutely insane growth numbers. And this fiscal year guidance is improved. The expectation prior was 23.5 billion. So another roughly 10, almost 12% increase in revenue guidance for the whole year. Now, to keep an eye on this one, liquid cooling solutions, they're now trying to target 25 to 30% of the global new DC deployments to use their liquid cooling solutions in the next 12 months. So they're pivoting most of their racks from air-cooled towards liquid-cooled, which provides more energy efficiency for obviously NVIDIA GPUs, Intel GPUs, AMD GPUs, and stuff like that, right? So take a look at SMCI's growth rate. You can see that it's far surpassing the industry right now. I don't think they can get their titles very well because they overlaid this one with a date, but that's okay. They're well above the industry average, and that's all you need to know. What this company needs to do, though, guys, is separate themselves from only being a server rack and liquid cooling solution company, right? Because we know demand for server farms and data centers is very, very high right now. But eventually, guys, that's going to taper off. When everybody has built out the infrastructure, what is this company going to do? Because server racks obviously don't need to be updated every single year. It's not software, right? It's literally just a server rack. What this company is trying to do is now they're trying to approach software, services, storage, security, and more. They're trying to diversify their offerings when their brand is hot, and that is the best thing that the company can do, in my humble opinion, right? So although it represents a very small portion of their business, it's an integral component of the longevity of this company. So I have no concerns for 2024 and 2025 for this company, but beyond that, they need to expand their reach beyond only being a server rack company, guys. That's not a heck of a competitive advantage. I mean, yes, they have a lot of the market share right now, but to be quite honest with you, like, you can ask yourself the same question, right? How hard actually is it to build server racks? It's not that hard, guys. Dell does it, IBM does it, a number of other people do it, right? So moving on in, these are what the server racks look like, the liquid cooling solutions and whatnot. 2,000 liquid cooling racks are going to be put out. This is per month. This is their supply capacity that they can put out, right? So moving on down, they are building a number of factories right now, which is influencing their CapEx, right? So their capital expenditures. So they're looking to build a few more in the Asian Pacific region, 1 or 2 in Europe, and another one in the California district right over there, Silicon Valley more specifically, right? Now, moving on in, guys, moving on into the juicy stuff, what I wanted to show you, right? So you can see here that there's subsystems and accessories, right? Only 5%. This is the line of business that I want to see them expand. As of now, server server and storage systems represents 95% of all the revenue. They really need to diversify out here. This is the same problem that Apple had back in 2016 and 2017 before they really started ramping up their services, right? So need to see them increase this because that is where most of your margin improvements can come from, right? So moving on in, guys, look at this revenue expansion, extremely good revenue expansion as a whole. Revenue mix, we just went over that, 95% for their storage and service, for their storage, and only 5% for their services. Non-GAAP gross margin. Net decreases in non-GAAP gross margin. You might see this at a first glance and get worried, but they labeled it down here, and I listened to the call, and the CEO and the CFO were very adamant on this. Down quarter over quarter due to customer and product mix and initial production costs on new DLC technology. Customer and product mix, meaning people are pivoting their orders from air-cooled to liquid-cooled. And this obviously costs the company more money to be able to pivot their production lines to those facilities, right? It's a higher cost product for them to make, which is why you do see gross margins coming a little bit down. This will not last forever. Once they scale up their liquid cooling solutions, which the CEO said would be by December, this should be alleviated and they should be recapturing a lot of those lost gross margins. Hopefully that makes sense. Operating expenses, same thing. The reason it's been on an increase is because of those liquid cooling solutions ramp. Operating margins, exact same reason, guys, right? Higher operating expenses due to investment in talent and research and development. The R&D section is definitely because of the liquid cooling, and the operating margin, of course, guys, ties right into our previous point because of lower gross margin, of course. Now, moving on in, guys. So net cash flow, you can see net cash outflows right here. That is due to their factory ramp up and factories ramp up across the globe, and also because of their pivot to that liquid cooling solution. How many times have I said liquid cooling solution? Almost as much as management on the earnings call. Haha. So moving on in, guys. So that's pretty much everything for SuperMicro. Hopefully that does make sense. Now let's take a quick look at their valuation, guys, and you will see the valuation is actually very, very good. So once again, the key points of this report right now, the 10-to-1 stock split is definitely a very good thing for them. That will be in effect October 1st. Now, good Q3 and the remainder of the year guidance, right? So renewed AI demand, good for semis as a whole. It reinforces the growth story. The growth is definitely not done. They did slightly get affected as well by the delay of NVIDIA Blackwell that was touched upon in the call. It slightly hinders their Q3 to Q4 sales, but you saw their Q3, Q4 sales outlook. They raised the guidance, but if there was no delay on Blackwell, that guidance would be even higher. So if that were the case, I'm pretty sure the stock would be up right now in the after hours. Now, in terms of the valuation, guys, fairly good. Revenue growing exponentially 25% and EPS per year 40%. No problem at all there. Take a look at their balance sheet. Their balance sheet is very, very decent, guys. Nothing bad to say. No debt really to speak of. A lot of cash on the balance sheet, and free cash flow is quite healthy as well. And then if we move down here, guys, to the forecast, you can see forecasts for EPS growth are explosive through the next 2 years. But once again, after that infrastructure is built out, I would be very, very cautious, right? Now, moving on into revenue. Revenue as well is said to be very good 2025 and 2026. But look, analysts are already modeling a slowdown for 2027 after that infrastructure gets fully built and scaled out. If the company does not diversify into software and service solutions, it is going to get left behind. So my take on the stock right now at $530, is it a good buy? Well, their forward PE for the end of the year at 530 is only a 24.6. That is nothing. When we divide that by their EPS growth rate, we get a PEG ratio of 0.62, guys. That is as cheap as can be. One of your cheapest valuations in the entire semiconductor market, and it is not even close, guys, right? Their growth rate could literally get cut in half, and this would still only be a 1.2 PEG. Very decent growth opportunity, which is why I bought some shares in the after hours. I wanted to buy some last week, but I wanted to see their earnings first, right? This is going to be a pure swing trade for me. It is not going to be a long-term portfolio add because of the problems that I said. The longevity of the company. They manufacture server racks, guys. This is not ASML. It's not NVIDIA, right? So yes, I like the company. The company has good valuation, and we could get some very decent upside momentum, especially through the end of this year and also into 2025. So swing trade, yes, absolutely. From these levels down here, it is crushed daily oversold conditions. Unfortunately, we don't have much support to base ourselves off of because of this massive ramp. The next closest support is really 500 down to about 450, but it's not that strong. The biggest one is down here. I'll be very surprised unless the markets truly have a massive, massive, massive crash, guys. I'd be highly surprised if we see SMCI down here in the mid 300s, but if we do, that would be a heck of a buying opportunity in my opinion. So from here, similar to what I did, guys, I just bought a couple shares. I do see a little swing trade opportunity. And for the medium term as well, over the next 1 year to hold the shares, I do see a nice opportunity as well. The valuation does support it. And keep in mind, daily oversold, we are crushed 40% from the most recent highs, right? So it could be representing a good swing trade momentum play for that semiconductor recovery. So that is pretty much everything we had to cover in terms of today's earnings. I think I went through them a little bit quickly today. So happy about that. Let me know what you guys thought. Now, moving on into our technical analysis portion of the video. So our S&P 500, you can see right now 0.92%. And what gets me a little bit worried, guys, is these wicks on the top of these candles. We obviously know that after yesterday's video, I was explaining that a rally continuation bounce was more than likely, right? We came into such brutal conditions, oversold conditions on the SPY, we were expecting a bounce. And then I told you guys, right, as long as we have the hourly uptrend, we will be in the context of an overall daily bounce. But look what happened into the end of the day. We gave back the entire last hourly leg. So if ever we lose today's lows right here, 518, lose 518 tomorrow, guys, you lose the hourly uptrend. And if that happens, your daily bounce is finished. And then we are maybe looking on to the lows once more. Keep an eye on the size of the bounce right now. Is it adequate enough, guys? No, did not get up to our 50% mark. So the bulls are not guaranteed a chance at resetting the daily uptrend. As a matter of fact, these probabilities do favor a bearish follow through, right? The moral of the story with the Fibonacci, guys, is very, very simple, right? Just think of this in very logical terms. If a big move like this happens with a lot of momentum, right? Now, if the bulls are able to recapture all of this move in one single shot, do you think the bears have a very high chance of doing this? No, they literally got all of their momentum killed by the bulls. It's going to be very tough for them to revisit this like this. However, if they put in a huge momentum move like this, and the bulls are barely able to get back 30% of the move before rolling over, that means that the bears still have a lot of momentum. They've maintained a lot of this move, and then they can use that momentum to further push the levels down. That is why we use the Fibonacci's, guys. It's not, we're not using these for exact science levels. Okay, I go short at the 618. No. It's a gauge of momentum of who is currently in control. And as of now, the bears do still appear very, very strong. We're tracing a lot. So at this point, a move down, if we break today's lows, is very likely to be revisiting these lows, would just be resulting in a daily lower high and maybe searching for that lower low. Keep in mind, guys, in terms of a lower low, where could we possibly end up? Well, the next big area of support, guys, is undoubtedly down here. I know it's a far ways away, but it's going to be all the way down here, 500 to 495. I know that's very low, but that's the extent that this correction can potentially take us, right? That would be an extended a correction of about 10 to about 12%. I would not be surprised if that does happen over the next couple of weeks or maybe next couple of months, right? If the bulls are able to save this right away, and maybe they are able to save this with a bit of follow through continuation to tomorrow and then maybe reset a daily uptrend, I would not be surprised if the result of that is maybe just a weekly lower high, and then maybe retest of these regions again, similar to what happened last fall. So price action over the next couple of weeks, guys, is going to be key. I will remind you, I do not have a crystal ball, and nor does anybody in the game right now. We have to watch the price action to see when are the bulls going to be ready to regain some short-term control, and then we can have some better levels to gauge ourselves off of for buying these dips a little bit further, right? Moving on into the QQQs right now. So the QQQs up 0.96%, but still in the context of a daily downturn, right? Clear as day right now. So traditional to the same as the SPY, right? Watch the hourly trend. Hourly trend is in jeopardy of being lost. If we do lose it into tomorrow, that will be the top of the daily bounce right now. And moving into our resistance as well. We were pointing this out yesterday, right? We could have a daily bounce, but I would not be surprised if it gets stopped in this big area of resistance. That's exactly what's happening right now. So in the event we do roll over, guys, keep an eye on the size of the bounce. Is the size of the bounce adequate enough? No, it did not get at least as high as 50%. You really want to see 618s, but 50% gives them a chance. 618 or better gives them the best chance, but 50 gives them a chance. Anything under 50, guys, is too weak. It usually at least gives the bears a chance to attack the lows. Maybe not break them, but it does give them a chance to at least get back all the way down here, right? So moving on in, guys, if that does happen, we get a daily lower high. Lower lows are probably incoming for the QQQs, unfortunately, at that point. And then we will just be looking, guys, for some weekly consolidation follow through down here. The next big area of support is down here, 413 all the way down to roughly 397. I can put a box there if you guys want. That's going to be the really next big area of support, guys, and should be an area that the bulls cannot lose. Why? It's your monthly higher lows. Unfortunately, if you do lose these monthly higher lows, you lose the monthly uptrend. Now, we can get the monthly uptrend back, but it takes a lot of time, right? We're not expecting monthly downtrend continuation like this, but if we lose the monthly uptrend, guys, it removes the possibility of a V-shape. Usually we will have to two-step that. It just elongates the process, similar to what happened back here, right? Loss of the monthly uptrend. And look at this two-step Let me zoom in so you guys can see exactly what I mean, right? So this is end of 2018, interest rate temper tantrum, the reverse of what's happening then. Back then, they were having a tantrum because rates were going up too quickly. And now we're having a tantrum because rates aren't coming down quickly enough, right? Same thing, but opposites, right? So monthly uptrend, loss of the monthly higher lows. And you can see they never set a monthly downtrend, but it takes some time. 1, 2-step recovery and then go, right? So it's not just a quick V shape like this. Takes a longer form recovery. So that's my only issue with the QQQs. If we lose that level, it could take a little bit longer, but at least we'll have more time to buy the dips, right? So that's the whole analysis on QQQ. Hope you guys understand. And obviously for the bulls to get this back, you have to get a further bounce in tomorrow's session. Moving on to the XLF right now. So now the big ones are out of the way. We'll go through the rest a little bit quickly. So XLF is trying for the same thing, right? Trying for the daily bounce attempt, up a very healthy 1.62% today, but it's not enough as of right now, guys. Keep a close eye on the hourly time frame. Lose that hourly time frame into tomorrow. Your daily bounce is finished, and you measure the size of the bounce, guys. Size of the bounce, very weak, 38.2, not good enough. Could likely be followed by some downside continuation by the bears. In the event the bulls continue the bounce, we will review that at that time, right? But leading into tomorrow, if we do get some flushes, keep an eye on these levels right here, 40.4, so crucial, guys. It's the weekly higher lows. Lose that, you lose the weekly uptrend, and you set up the bears to open up for maybe weekly downtrend consolidation and maybe even further extension of the monthly consolidation too. So wouldn't look the best. We'll take this one day at a time for financials. They still are in a good area of support right now. I'm not saying the bulls have lost everything, but we have to be open to those possibilities. It'll all be on the possibility. It'll all be on the bulls' backs to push this continuation bounce into tomorrow's session and get themselves above this area to use it as support, right? Moving on into healthcare. Give me a quick second again. Healthcare up 0.46% today. Decent performance, but the markets gave so much of this back, guys, in the last hour and a quarter of trading. XLV was, as a matter of fact, up at one point today. They were up almost 1.6%, ending only up about 0.5%. Just goes to show you how overall weak the markets still are, that they can sell off a whole day's worth of gains in only an hour worth of trading, right? So loss of the daily uptrend is clear as day. Flush of the lows. We are just looking maybe for a lower high into lower low continuation. Look at the size of this bounce right there. The bounce was decent, right? 55% bounce. So the bulls do have a chance on healthcare to protect. If ever we do lose this hourly downtrend right here, the bulls do have a chance right now to maybe save these lows. I know they've given back a lot of the move right away. They have a chance, but if ever they roll over, guys, it'll be daily official downtrend. Then we watch to the lower areas of the support range right here, 145 to act as some defense. That is also some very beautiful consolidation on the weekly. Weekly, still a nice weekly uptrend, but cannot take back too much, or you end up in a scenario like financials where you take back too much and you open the door for lower high into lower low as the markets move through one of your worst seasonal months, the months of August and September. Keep that in mind. Moving on to SMH right now. So SMH, decent recovery today, but obviously once again stunted by the last 1 hour of trading. You can see that very clearly on the chart. So SMH, same thing. Keep an eye, guys. We were watching the hourly time frame and look at the lows, guys. If we lose these lows and lose the hourly time frame into tomorrow hourly downtrend, you guys know the daily bounce is finished on SMH. And keep an eye on the size of the bounce. That's where we were watching out for. Size of the bounce, barely 50%, guys, right? Barely 50%. So I would not say that the bulls are out of the woods yet. It opens up the door for the bulls, for the bears rather, to have a chance at breaking or retesting these lows. At least that would be the lows at around the 198 level. So the bulls absolutely need to keep this bounce going into tomorrow. At least bring me into the 230 area. I know up here is a big area of resistance, guys, but we need to get a more juicy bounce into this level to set up the bulls for maybe a daily trend recapture and start to recapture a little bit of this weekly loss as well, right? Maybe set a weekly lower high, and then we can talk about recapturing the weekly as well later on in the month of August and early September. As of now, the bears in full short-term control. of your daily, and even the weekly downswing is very, very powerful right now. We're at the last area of support, guys, and that's going to be 200 psychological, right? The next one, you guys don't want to know where it is. It's all the way down here, 175 to 166. Not saying it's going to happen, but if ever we, for some reason, start revisiting these lows, we have to anticipate what could be the next continuation level off of those. So once again, price action is key. Size of this bounce is also key. We're going to keep a watch on this, one day at a time. Moving on down, IWM Russell, same thing. Nice 1% bounce, but in terms of the size of this move, guys, do you think this bounce is enough? Just visually, without the fib, is it a decent enough bounce? Probably not, right? Take a look at this at the fib. So only a 30% bounce, definitely not going to be enough. Keep it on your hourly time frame rollover, same as the rest of our markets. If we continue pushing higher into tomorrow, fine, the daily bounce will continue at that point. I would like to see the bulls at least march themselves into the 210 area, regain a little bit of this before being able to maybe get a chance at a daily low, a higher low, and reset to the daily uptrend. Anything under that, guys, if we get met with resistance up here, such as we're having right now, maybe just reiterating the fact for a daily downtrend formation, especially in a recession narrative, very tough for growth stocks. I would not be surprised if the IWM, if the rest of the markets do not perform well, if they just grind down and lose all of the games progressively, guys. They had a gorgeous weekly uptrend going, but the problem is they gave the entire thing back. Usually when you see a massive engulfing move, the best that you can get is a tightening range. The worst you can get, of course, is weekly downtrend. I'd be looking out, guys, in the next couple of weeks for a retest of the lower 190s. In my humble opinion, very likely scenario. Moving into the Dow Jones right now, Dow Jones, same thing, was having a nice day of bounce erased in the last hour of trading. So Dow Jones hourly uptrend is decent. They do have a lot of space, guys, right? As more than the rest of the indexes, at least. Higher low in the hourly is down here at about 38,600. So going to be looking to push this hourly uptrend into tomorrow. If we can continue to push this, we will be monitoring the size of the bounce, because the size of the bounce right now is definitely not the best, right? Only about a 30% bounce. So I need to at least see us get into 39,900 for the bulls to have a chance at recapturing this daily uptrend, and have a chance as well with that daily uptrend of putting away some qualms about them losing the weekly uptrend as well, right? This is still a very nice weekly uptrend, but the bears have taken back a lot over the last 2 weeks. Need this support level to start acting and continue acting, 38.6 down to 38.2, and provide some support by the bulls and start recapturing some of this weekly move. That can only be done if the bulls have a decent enough size bounce on the daily, reset the daily into an uptrend, and start regaining some of those weekly levels, right? So the Dow Jones not looking too bad, but also on the verge of losing a very key level if the downside continuation keeps pushing. The VIX, at least today, guys, the VIX was down significantly, down 28% from yesterday's highs. But still, in the context of where we usually are on the VIX, guys, this is elevated. This is as high as we were. The sell-off in last October, a lot higher than then, as a matter of fact. March 2023, we're as high as we were in the banking crisis of last year, and as high as we were at the peaks of uncertainty of the asset crush that was 2022. So definitely a lot higher elevated levels than we are used to right now, but should still continue to downtrend as long as you don't get further bad data throughout this week. I would not be surprised if the VIX just slowly keeps grinding down as it is natural for it to do, right? Now, moving on down, guys, to our big tech names, shall we? So moving on into Apple. Apple down about 0.97% today. So Apple, same concept as the rest of our indexes, guys, right? So daily downtrend is clear as day. Apple did have a very decent bounce yesterday. We were watching for the maintenance of the hourly uptrend. You can see it's very, very choppy here, guys. However, if you lose the lows of pre-market today, let me just turn these off. As a matter of fact, now that we're done earnings, don't want to view that. So hourly, decent, right? It is a tightening range right now. One thing you cannot lose is 201, break of 201. Hourly downtrend is commenced. And unfortunately, we start a new leg of daily downtrend as well. The level that I'm looking out for Apple, guys, I really can't buy it up here. I know it's at 205, but with the valuation right now, guys, at about just about a 3 right now at 205, it's a little bit too rich. And with the overall weakness in the markets, I do believe that Apple could have a degree of, of drop to have in it still, right? So where I really get interested in Apple, to say the least, is really down below here in the mid 180 levels. I really think that it can retest those zones, especially surrounding the weakness around big tech right now and the weakness around Apple's revenue growth specifically. Still a long time away from their AI quarter just yet. So it could just be a case in point where Apple continues to drop. If it does drop, guys, I will be looking for short puts closer to maybe the 190 to 180 range. That's where I want to start playing this stock again. As of now, it's a little bit too in the middle for me to play it right now, right? In the exact middle of the bounce, right? 50% bounce. So I really need to see some downtrend continuation for me to be interested back down here, or I need to see a daily uptrend recapture to get a better level of support to base some future trades off of. Even though I wouldn't want to do it on Apple, that's just the way I trade based off of price action structure. So as of now, not looking too bad, but I do think that this one has a little bit more to fall just due to valuation concerns. Moving on to AMD right now. And AMD, guys, they started off green on the morning, but once again, you guys know AMD, unfortunately, they had to give it all back. So hourly downtrend now in motion, which means, guys, that your daily bounce attempt is now finished, and we may just be looking for a retest of these lows. Now, the size of the bounce was fairly decent, as a matter of fact. Size of the bounce from bottom to top was around 55%, so very decent. The bulls do have an opportunity here, guys, to maybe be able to reset this into a somewhat of a daily uptrend, right? But it's going to take some time. Right now in the after hours being affected by SMCI to the downside, of course. So we will watch. Can they find a bottom on the hourly trend, reverse this, signaling that a daily higher low is found, and maybe start cracking above these highs, retesting the 140s. Keep in mind though, guys, right now, we are acting against a lot of overhead resistance. We have all the moving averages above us as resistance, and we have this zone right here, 140, 130. This is a crucial piece of the puzzle for AMD. Prior highs right here, congestion area, and has been congestion for the last couple days of trading, last 10 days of trading as well. You can see how big of an impact this zone has. So we really need to gain some momentum and smash through this location so we can then use it as support and start regaining some levels and really give some of our weekly bulls some momentum to work with here, guys, because as of now, it's not looking the best, right? If ever we do fail these lows and revisit lower levels, you guys know where we're heading. 117 now to about 107. That is the next big area of support for AMD stock. I like it down there. I'll continue to play it below 120 in my humble opinion. At 145, guys, it was a 1.18 peg. If you want me to do the pricing right now at about 128, let's say, so 128 divided by their EPS, right, 3.5, that gives them a peg ratio of 36.5 divided by their EPS growth rate. They're at a 1.04 peg. That is very, very cheap for AMD, and 2025 should be a very good year. So we'll be looking to build a little bit of position, guys. Be patient and hold into the best year of AMD, which is going to clearly be 2025. Look, guys, look at this massive EPS ramp that starts as soon as next year through 2027. That is when their data center scale really comes into effect. Moving on to Amazon. So Amazon up 0.57%, but also very weak, right? They really were looking like they wanted the breakout and start retesting some of these higher 160s, but can't get it done, right? Which is why Amazon still struggling right now. So hourly uptrend clear as day right now, looking to continue this hourly uptrend into tomorrow. If we can do that, guys, our daily bounce does continue, and we continue measuring the size of the bounce to recapture as much of this earnings move as possible. As of now, the bounce has unfortunately only got as high as about 35% or something like that, right? Not high enough. So if you lose the hourly trend into tomorrow, unfortunately, and we roll over, that is the top of your daily bounce. And the retest of these lows is very likely for Amazon, in my humble opinion. If we do get a retest of these lows and maybe even break the lows, that would just signal that the weekly consolidation is still underway, right? And we will be targeting an area below us, which is going to be this one right here. Let me put a little box right here so it's more clear for everybody. This is going to be, guys, the back up the truck area for me if ever we come into this location right here, right? Excuse me. So this whole 150 down to about 137 area right there, look how much support it's been in the past for the stock. Resistance right here, back test of support as well. And the 200 weekly moving average is sitting down there. That will be a top to drop bottom on Amazon. If we come down there, right, 25 to 30%. Usually always a great buying opportunity for this company. Nothing bad happened with this company as a whole, right? Only overall market sell-off. Their earnings were very, very good. Their growth is still very, very good. And their profit margins are now better than they've been in the history of the company. So I still do maintain at these lower levels, 160. Is it a little bit of a nibble? Absolutely. And as we move further into this zone, this is where it starts to get a little bit of a heavier buy. But at these zones, definitely still a little bit of a nibble. We will take this price action one day at a time, guys. And obviously, if the bulls keep bouncing, we will then measure the size of the bounce. And if they can get high enough, then we will try and play the daily higher lows. And for the daily trend recapture, this will be the ideal trade entry location because we can set our stops below these lows here. Moving on to Google. Need to wait for those confirmation, guys, right? That's how we make sure we're not trying to pick daily falling knives, right? So moving on into Google right now, same concept. Daily downtrend, clear as day right now, watching for the size of the bounce. How do you know the bounce is here? Recapture of the hourly trend, but Google has not recaptured the hourly trend just yet, which is why I have not gotten out of my covered calls on Google. So if ever we break today's low, hourly downtrend is unfortunately maintained, and we just continue this daily downtrend a little bit further here, guys. If we do continue, where could it possibly be coming? Into the 152 all the way down to 144 range. That is such a beautiful area for Google, guys. Prior all-time high resistance and prior resistance right here should be current support for the market right now in Google. That will be a top to bottom sell-off of anywhere between 20 and 25%. Usually always a great buying opportunity for Google. It will, however, take them some time to recapture this weekly uptrend eventually, right? Loss of the entire weekly uptrend as seen right here, flush of these lows. So it will most likely be a multiple step process, not a pure V-shaped recovery. So keep that in mind. We will probably have a decent amount of time to buy the dips in these lower areas, as we do have seasonal weakness these next 2 months. So keep that in mind. Right here, decent area to nibble right now. And down here, decent area to load up a bit heavier because the valuation down here gets really, really attractive. However, I'm not going to rule the bulls out, guys. If we continue our bounce into tomorrow, you guys know the drill. We keep an eye on the bounce the whole time that it lasts and then measure the size. And if it's good enough, we try to play the higher lows, right? If we get that higher low right here, we can write short puts below here, and we have a closer support zone to be basing ourselves off of rather than trying to catch a falling knife. Moving into Meta right now. So Meta up about 3.86%, one of the best performers. They were actually up over 5% at one point on the day. Very, very nice, guys. Meta right now is pretty much in a very, very wide range right now, right? So daily uptrend was clear. They lost it and now heck of a bounce. So it's kind of all over the place in the last few days of trading. Very, very volatile, right? But what I like is the size of the bounce from this crush right here. Size of the bounce is very, very good right now. Talking about over 61%. This is the bounce size that I need to see in these stocks, right? But of course, all the rest that we've seen so far are weak. So if the rest of the market continues rolling over, do you guys think that Meta can do it on its own? Probably not, right? They may even be able to give back a 618% move. So we have to see Meta in the context of the overall markets as well, but very nice. They are now above a decent area, above our short-term moving averages, and back above our big area of support that we were using for pretty much since the month of February. So that's going to be 481 to 457. The closer we get to the 450s is my nibble range for this stock. And if ever we break through and come down below here, guys, 420 to 400, that is my back up the truck location for Meta. So keep those levels in mind. The valuation is very, very, very good for this stock right now, guys. A 1.23 peg at $500. Very, very attractive valuations for one of the best and most profitable companies in the entire world. So looking good on Meta as a whole. Now moving into Microsoft. Microsoft also with a little bit of recovery, but you can see ending the day weak, right? They were actually up a decent amount on the day and gave most of it back in the last hour of trading. So now hourly uptrend on Microsoft. Yes, keep an eye looking for the hourly higher low, anything above 393, looking for the hourly higher low to continue this hourly push higher. Keep in mind in terms of the daily bounce here, guys, look at the size of the daily bounce. We really need some hourly trend continuation because the size of the daily bounce is just not the best yet. Yes, we did hit 50%. It gives the bulls a chance to reset the daily uptrend. But if we can bounce even higher into the 618 or maybe even 70% range, those probabilities get even better in their capacity to reset the daily uptrend and start taking back a lot of this weekly damage that has been done, right? Obvious loss of the weekly time frame right there, weekly lows being broken. So now Microsoft will be looking for a two-step recovery process, right? However, if we blast through this area of support right now, sitting at the lower 390, if we just blast through it like it's not even there, maybe back test it on the weekly a little bit, the lower bound of support comes between 360 and 350. Now, this area right here where we're in right now is a decent buy the dip opportunity on Microsoft, down about 16%. This is a nibble entry location in my humble opinion. If we come down here, this is a load up location for Microsoft prior all-time highs, resistance, backtest as support, should be a very strong location. And that would be a sell-off on Microsoft of anywhere between 20 to 27%, which is usually an amazing buying opportunity from Microsoft anywhere off its all-time highs. 25, 27%, guys, is a gift by the markets. All right, so moving on now. Let's cover Netflix right now. So Netflix also 1.84% to the upside. Nice little bounce on Netflix to speak of. So as a whole, guys, Netflix not looking too bad, right? Size of the bounce is also decent. So you guys know the drill by now, right? Take this fib, put it 618% bounce. So it does give the bulls a chance at resetting this into a daily uptrend and start recapturing a little bit of this weekly move that they've been plagued in for now. But keep in mind, overhead resistance, this red box, was previous support, now going to be resistance, 631 up to about 606. That's going to be the mark. If ever we just continue flushing down through these levels, I really like these lower locations right here, guys. I'm thinking 550. 550 range could be a very decent location to be adding some Netflix. As of now, the bulls are trying their best to play defense, but since we are now below an overhead resistance, moving averages as well, if the markets are weak, I would not be surprised if we do retest maybe that 575, 550 location at that range right there, 550. That's when I start nibbling a little bit on some Netflix shares. So not looking too bad in the grand scheme of things, guys, but could maybe have a little bit more to fall. Now, moving on to NVIDIA. So NVIDIA have actually had a very, very healthy bounce today, but similar to the rest, gave it all back in the last hour of trading. At a certain point, NVIDIA was up 7%. Only ending up 3.78, but not too bad. So in the context, let's look at the hourly. First things first, hourly uptrend. Need to see this maintain into tomorrow's trading if you want this daily bounce to continue. Now, if ever the daily bounce is topped out, we have to measure how much did it get to, and it got almost up to 618. So NVIDIA is definitely one of those stocks that does have a chance at resetting a daily uptrend in motion. So we will see if they are able to do it, guys, or if the bounce continues into tomorrow, that even betters their odds, right? They need to really break out of this location they're in right now. 103 down to about 95, this big area of congestion. They've now filled the prior earnings gap. And if they can move out of this location, they can then use it as support and try and reset the daily uptrend and really start recapturing a little bit of this weekly move down, maybe leading into their earnings, which is going to be the end of the month, the 28th of August, right? So NVIDIA, not looking too bad. And I do maintain, guys, if we start retesting these lows, look for short put opportunities. There will be some juicy ones, 87, 85 range, where there's some better support. Those are where I like writing my short puts on NVIDIA. So I will be on the watch for those. But as of now, the bulls have done a great job on bouncing. It's just we need to see further confirmation that they're going to be able to reset this daily into a daily uptrend and start recapturing some of this weekly damage. But so far, off to a decent start. Moving on into Tesla right now. So Tesla, a little bit weak today, only up about 0.88%, but at least they were green, right? So daily downtrend is notable on Tesla right now. Daily bounce is underway. That is seen by the 1 hour trend change. If this hourly trend change continues into tomorrow, you guys know the drill by now, right? Keep an eye on the size of the bounce. That is key. Only 38% right now. You need to see Tesla come at least as high as 213. Get me a 618 bounce. We can talk about resetting the daily uptrend and maybe putting an end to some of this weekly consolidation and getting a weekly bounce as well. But on the weekly, guys, right, it was a weekly uptrend and still is. But you can see the problem here. The bulls have lost all of their momentum. They've given it almost all back. So the best case scenario is maybe just a tightening range in the support zone right here. This green box, right, 220 to 200. And the worst case scenario is lower high into lower low and maybe start revisiting the lower $170, $175 range. So we'll take this one day at a time on Tesla. Tesla, in my opinion, will move with the rest of the market. Not so much company specific news to be looking forward to, at least for the next 2-3 months until that robo-taxi event in the month of October, right? Moving on to Palantir. So Palantir having a great day after their earnings, guys, right? They came back a little bit down to this morning, but still ending the day up 10.3%. So very good day for them and beautiful engulfing move after the earnings, right? So daily downtrend was notable, big engulfing move on the daily. And this is what we were speaking of yesterday, right? Palantir is not going to be able to hold it up on its own. If we get some further green rally follow through by the bulls, then Palantir can continue its rally on its own. But if the rest of the market continues, if you have the rest of big tech continuing to smash daily downtrends and further weekly consolidation, Palantir won't be able to hold it up on its own, guys, right? It will start retracing. That being said, they have created a lot of space. Anything above 21, going to be looking for a daily higher low for further trend continuation. So this looks like a great cup and handle, guys, right? If we get a little bit further back test, which we did today, 26 to 25 is your first zone of support. There's a support zone right there. And if we do fall a little bit further because of broader market consolidation, I'm still a very big fan, guys, of picking up Palantir in the lower 23, below 23 to 21 is a very decent location for the stock. As right now at 27, guys, the PEG ratio is a little bit high, and the markets right now, you guys know the markets are very picky right now as to what growth stocks with high multiples they allow to run, right? Which is why I say for Palantir to really break above this 28 to 29 area, which was the most crucial resistance area of the last couple of years, they're going to need overall broad market support. Nothing really wrong with the company itself, however, right? So that's pretty much everything we had to cover for today. Now let's take a brief look into my portfolio for a few of the updated trades. All right, guys, so taking a look at the portfolio, before we get into the trades that are here, let's get into a few of the ones that I've closed. And it's been a very good start to the week so far. I've been very aggressive in terms of taking profits, and so far it's played out very nicely. We are up pretty much almost $1,000 in premium over the course of the week so far, just making very decent swing trades as a whole. So a few of the ones that are not there anymore, guys, we went with the NVIDIA 75 puts after the massive drop yesterday morning. And I was telling you guys that I closed them yesterday for a nice profit. You can see that right here. We opened them for about $1.01 and we closed them for about 20 cents. So nice little 80% profit there on that NVIDIA trade. Really just a swing trade from yesterday morning as a whole. Then we had these call options, right? You can remember I got the SVXY inverse of the VIX. So we were counting on the VIX to come down. So we bought 2 call options and those were also both closed today for a very nice profit with the fall of the VIX. I just do not want to take any chances, guys. If we have, any negative piece of data come in tomorrow or something like that unexpectedly, well, that's going to trigger the VIX to have a little bit of a move up. So I saw profits and took them accordingly, right? So this one, the $30 call, you can see right here that we bought them for 13.5 and we closed them for 14.5 today. So 1 day trade, $100. Can't go wrong with that, guys. Very decent ROI in terms of on the option. So that was one of those calls. And the other one of those calls was the $35 call right here, which we picked up yesterday for pretty much $9. And we were able to sell that for 11.1. So very good ROI on that one as well. About $210 collected. Very decent trading on the VIX. Usually you don't want to overstay your welcome on the VIX option, specifically 1, 2, 3 days maximum, right? Even though we took a lot of time on those, we took those because the extrinsic value crush wasn't going to be as much as some weeklies, right? So hopefully that makes sense. Then there was a lot of other trades that we took in terms of swing trade intraday. So obviously the Palantir puts that we sold yesterday prior to earnings, they were worthless, so we just closed them. Microsoft, here's one, the Microsoft that we closed today, right? So Microsoft, 365, so we got them for 182, and you can see we closed them today for 35 cents. Very, very decent gain. But I actually played this one a couple times today. I chased it up a little bit. You can see we then went with the Microsoft 375 puts. So 2 strikes higher, we got 67 cents, and we were then able to close them later on in the day for 32 cents. So another profit on Microsoft, 2 profitable trades on Microsoft in as many days. Just looking to swing these bounces here, guys, right? Not looking to get married into a position and really giving myself a large margin of error to the downside in the event of stock declines, right? Now, in terms of something else that we did, we also had some AMD 115 puts. You can see those right here. Those are pretty much a swing trade at the open. And you can see we got them for 64 cents, pretty much over 0.5% in premium. And we were able to close them later on in the day today for about 30 cents, looking very, very good. We pretty much did the same thing for Google. We sold the 150 puts for 69 cents. And then we got pretty much which is pretty much almost 0.5%, right? We bought them back for 24 cents before the close. Not taking any chances, guys. If I see 50, 60, 70% profit in 1 day of trading, why would I hold it for the rest of the week? It makes no sense. You might as well close those trades, reallocate the capital to something else, right? So those are just a few of the trades that I just closed over the course of the day. The rest of the ones that were open are as followed. I took a few earnings plays. I got the AirBNB 110s. This was a 2 standard deviation move, and you can see AirBNB right now is trading right around the 110 mark. I'm really not that upset over this one, guys, right? Because I like the company. It's traditionally towards the lower end of the valuation, and I have a few strategies that I can use to protect against any further losses. So we will see how they open tomorrow. In my opinion, a little bit overdone in terms of the sell-off, but I like having shares down here. So I'm not really too upset over this one, guys. We will maintain the position and we will make a profit on it accordingly. Now, moving on in, nothing else much changed. So we'll just go over the ones that did change as a whole. You can see that I rolled my AMD 120. I had the 115s this morning, right? We went 1 strike higher for the 120s, got 59 cents on them. We'll see how those go, but surely if tomorrow we get a bounce on AMD, guys, I'm not looking to hold these till Friday. If I can get 50%, 60% in tomorrow's trading session because we get a bounce, I'm going to lock in the profits and walk away from that trade as well. Now, moving on further, guys, we took a little bit of a chance here on CELH at the $38 strike. We got 28 cents in premium, but unfortunately, guys, it just kind of ran away from us in the later hours of the afternoon. I waited. I did not play this one for earnings. This one I played pretty much at the start of the afternoon right here at around the $41 mark. I was looking for them to maintain the hourly uptrend. They just couldn't get it done. If ever I get assigned at $38, guys, I'll probably just keep the shares, to be quite honest with you. I may write some longer duration covered calls to get a bit of premium, but it's not that big exposure as a whole, right? 100 shares is $3,800. I like the company. I think it's fairly valued down here. So this is another one where I may just hold as a byproduct of the entire market selling down. I may just like the valuation down here and end up holding them, kind of like AirBNB, right? Don't want to get out of these too quickly because I actually like these levels. Now, moving on further, nothing else really has changed in terms of the rest, guys. Microsoft, we didn't add to the position today either. What else did change? I did a Micron right here actually did change. We actually did a bull call debit spread. So we got $1.11. You can see it's a $250 spread. So we're only looking for a maximum profit, guys, of roughly a 2x. If I can close these around $2 each, that would be good. These are for September 20th, 92.5 versus 95s. The only reason I do the call debit spreads, guys, is because the VIX is so high, right? Options premiums are very high, and a way to avoid that is using call debit spreads. Or if you want to do put options, if you want to make a bet on a stock going down and the options are expensive, you can always do a put debit spread as well. It really removes a lot of that volatility premium as a whole, right? Obviously, it limits a bit of your returns because the returns are capped, but at least you're not getting price gouged by the market makers. So all I'm looking for by September 20th, guys, is to get out of these oversold conditions on Micron and have a little bit of a bounce maybe into the higher 90 level, maybe even as high as 100. That would really make me get my 2x and we would be all good. So it's a very small play for me on Micron, but I figured I should play the oversold conditions. And the valuation down here, guys, is very, very decent. We did it at 131 and the valuation was already quite good. At 87, it's really fantastic in my opinion, which is why I took a tiny little play on it as well. And we even wrote some short puts for the Friday session, $80 puts, 29 cents, fair margin of error, right? That's about 10% away. And if we do get assigned at 80, I might even hold these as well, guys, because I like this level. Valuation is a lot more manageable there, and they have no demand problems whatsoever for the remainder of the year. Just overall semiconductor weakness right now, right? So this is one that if I get assigned, I may look to keep and I may look to ride up higher and try to milk it for all it's worth, right? So moving on down through the list, we did also add a few earnings plays. Rivian, $10 puts for earnings. We got them for 6 cents minus commission, 5 cents, of course. So this is going to be pretty much, $25, not more, not less than that. And we also went with some $11 puts too, 2 contracts for 10 cents, but I like the premium here. This was 0.5% for a huge decline. This would have needed a 30% decline, guys. So I had a large margin of error. This one as well would have required about a 26% decline. Very, very large decline, 25%, right? We got about 11 cents for these, 10 cents after commission. So we should be able to pocket all of that premium tomorrow because Rivian actually had some decent earnings and are nowhere close in the after hours to 10 or 11. They're actually at about 13, almost $14. So should be able to close those for worthless. And then you can see I did add 2 SMCI shares in the after hours while I was listening to the earnings call. I figured that 13.5% of the downside was a bit overblown for the fact that they're pivoting their offerings to liquid cooling. And they're going to be able to have a lot of business with that liquid cooling in the end of the year and next year, which is why they increased their guidance in the first place. So another case of a stock that unfortunately was hit. Even though they had great guidance, they were hit because of things that they are doing right now in terms of capital expenditures, right? That's pretty much it, right? We still did maintain the SVXY shares, and these are going to be maintained, guys. I want to ride the VIX down over the next, 2-3 weeks and try to sell these shares as close as possible, maybe to 50. So maybe I can make $10 a share across 25 shares. I know the position's not that large, but if I can make a good, let's call it for all intents and purposes, a good like 25, 30, 35% on these, make $250, $300, that'll be a very welcome profit on a relatively small position, plus the profits we got on the SVXY call options, right? Nothing else changed. We also made one tiny little play on win the $66 puts for 17 cents. Very tiny play, but that was a 2 standard deviation move for earnings. I liked win down there at 66, guys, and they just had earnings in the after hours right now. They're trading right around $78. So we should be able to close that for pretty much 90% profit. 66 would be all the way down here in the huge level of support. That's why I took this earnings play. The valuation down here is very good in my humble opinion. And I was pretty sure they were going to crush this quarter because Vegas demand has really been high as per a few other companies reporting as well. That's pretty much everything I had to share for you guys today. So if you enjoyed today's video, consider dropping a like. Would appreciate it for the growth of the channel. If you're new here, consider subscribing. We do these every single Monday to Friday after the close. So hopefully I see you back in a future video. And lastly, if you have any questions, guys, now is definitely the time with heightened uncertainty, volatility, and stuff like that. Ask me all the questions you want. A stock-specific question, options play, technical analysis, macro discussion, whatever you want, guys, leave it down below in the comments and I'll get back to you in 24 hours or less. So take care. Hopefully you enjoyed the video. I will see you guys tomorrow after the close. Have a good one. Best of luck in trading. Love you guys and peace.